Okay, good afternoon, everybody. This is Andy Pedraza with Special Effects Academy on our start of the week session on April 15th, 2018, where we take a look at the week that ended as well as some of the longer term charts to see if there's anything in play. So with that said, I'm going to get started. Our agenda is our usual table of contents. We're going to look at the currency strength meter for the prior week and the week before. We're going to look at any fundamental announcements that are on the calendar for this week, high level only. We're going to look at the major pairs, at their charts, daily charts, so we can see what's going on. We'll see if there are any setups in progress for any long-term trades. I really love those because they tend to take 3-4 months sometimes to fulfill, but they give you a nice little chunk of pips. But more importantly, we're going to see if we can determine what direction the markets might take up for the week so we can do some shorter term trades. We're coming off a pretty good week. We want to continue in that vein. The 2 weeks prior weren't as good. So this week was fantastic, got us back on track, and we want to continue capitalizing on that. And then we'll have our usual parting words. We always try to impart a little bit of guidance and wisdom there at the end as to what you should focus on, usually taking stuff from what's been going on in our own lives and trading as prompts for the message we want to convey. Okay, so that's that. I'm going to get started with the relative strength meter for today. What you're going to see on the right-hand side of your screen is the relative strength meter for this week that just ended. And then on the left-hand side is for the week before last. So if we focus on this week that just ended, we see that the Aussie continued making a nice recovery against pretty much everybody except the Canadian. I've been expecting that for a while. We're now going on our second week of Aussie recovery. That's been good. The Canadian is also going on, I think its third week of recovery. Doesn't seem to be slowing down. The only thing I can point out here is that gold did appreciate. Silver did appreciate against the Canadian this week. And silver and gold tend to be a little bit of nice contrarian predictors. When you see silver rising against something, that usually indicates that the market, that you need to be looking at the market very carefully. There might be a change in the wind. I do not believe in Canadian strength for the sustained Canadian strength, I should say. I do believe that it'll get stronger before the end of the year, but I think this was a little bit of a premature move, and there's a lot of things behind it. The trade wars brewing here and there, also the early signing of NAFTA, the North American Free Trade Agreement, a bunch of stuff that has been giving the Canadian a bit of wind in their sail. And I don't know that that's necessarily going to last. So I've been waiting on these charts to actually trade Canadian weakness, but I'm in no hurry. I'm waiting for that to play out. The Swiss weakened against everybody except the JPY this week that just ended. And we did catch at least one good trade with the Swiss throughout the week. The euro weakened against everybody, well, against half of them really, weakened against the Canadian, Aussie, Kiwi, and pound. That is good because we were in a long-term trade on the euro pound that fulfilled last week. It did weaken, it did strengthen against the dollar, the Swiss, and the JPY. Again, we caught that euro Swiss as well, but we did have a euro dollar trade that took us out at our loss, at our stop loss. So mixed bag there, but we did make quite a number of pips on the euro. The pound is also in the middle of the pack. It's been weakening against the Canadian, Aussie, and Kiwi, and strengthening against the euro, dollar, Swiss, and JPY. The JPY was the overall loser for the week. It weakened against everybody else right at the bottom of the pack. The Kiwi had a mixed week. It's weakened against the Canadian and the Aussie, strengthened against everybody else. U.S. dollar strength strengthening against the Swiss and the JPY, and it weakened against the others. And I'm not going to dwell on silver or gold. They're doing what they're doing. Just leave those be. I use them as bellwethers, but I've already said enough about that. So that's your RSM, your relative strength meter for the week. You can compare with the week before and see if there's any sustained trends in this or that, but I'm going to move on right now. We have a busy week coming up on the fundamental announcements, and remember, the ones I'm showing you are only the high-level ones. Filtering out medium and low, as they really don't tend to move the currencies a whole lot. If you want to see the full calendar, of course, you can go to our website, specialeffectsacademy.com, fundamental-announcements, or you can see that link on the sidebar if you scroll a little bit down from the front page. And you can see the entire calendar, not just the highs that I'm showing here. But that being said, let's move into this. On Monday, we have retail sales out of the U.S. economy. I don't pay attention to these. Not a big deal for me, but they're on the calendar. We have the Royal Bank of Australia's meeting minutes at 9:30 p.m. U.S. Eastern Daylight Time. That could go either way. Sometimes these announcements are really good, so I will be trading that one. 9:30 is pretty much my prime time for trading anyway, so I will be taking a look at that. If anybody's interested, I'll probably open the trading room up 15 minutes before, just to see if anything happens. We'll have been coming right out of our 8 p.m. meeting, so if anybody wants to join me, I will mention that again tomorrow at the 8 p.m. And of course, you're all invited to that if you want to. On Tuesday, we have average earnings from the UK at got all in the morning, dark 100, so 4:30 a.m. my time. I'm not going to be doing anything with these either. On Wednesday, we have a bunch of CPI, Consumer Price Index, which are irrelevant to me. I really don't trade on those. They do not tend to have a whole lot of impact on currencies. But more importantly, on Wednesday, we have the Bank of Canada rate statement, interest rate decision, monetary policy report. This is huge, guys. And I will be trading this one live. So I will be opening up the trading room around 9:30 a.m. that day. And we may forego the noon meeting. We'll play that one by ear. But I'll send out an invite for Wednesday at 9:30 a.m. because this one has the potential to make our month if there is a rate change. And there is a very good likelihood that there will be a rate change in the works for the Canadian this month. So that one I'm going to do live. And moving on, there's a few more there at the bottom. So there will be a press conference from the Bank of Canada about an hour and 15 minutes after the interest rate decision comes out. That also has the potential to be a mover if they give any further guidance indicating that there will be more rate increases or decreases in the near future. So it's worth listening to, and I'll probably be trading it live as well, but not really worth opening up the room for that one. But again, we'll play that one by ear. So I'll make a decision on Wednesday as to whether I want to just leave that room open after 10 a.m. and continue trading through the noon session, and then what we do after that. So stay tuned for that announcement. Then another CPI coming out of New Zealand later that same day. I'm not going to do anything with that. Employment change and unemployment rate out of Australia. Again, that one could go either way. If we have if the numbers come out very different to expectations, it will affect the Australian dollar. So I'll likely be looking at that one live, but not a whole lot of. Usually, they don't tend to move the Australian a lot. Last but not least, we have the CPI coming out of Bank of Canada on Friday. And again, I ignore CPIs. If I could filter these out, I would. They don't move the markets much. So those are your fundamental announcements for the week. Again, if you want the full calendar, just go to our website, fundamental-announcements after Special Effects Academy, or you will find the link to that on the right-hand side in one of the little menus there. Moving on now, we'll start looking at our major pairs that are daily charts. And the first one I want to highlight is the euro dollar. The euro dollar has recently, and by recently I mean in the last week, this is a daily chart, it has broken out of this this upward trend, this downward trend line, I'm sorry. So it's gone back to the outer trend line it had been following, done a little bit of a retrace. It may end up testing this area within the shaded, within the cloud. But more importantly, on that trend line break, this is actually a great entry if we're trying to trade it up towards the top. This is, of course, a daily chart, so the stop loss would need to be below this most recent low, which is about 200 pips. But the payout is also going to be 200 pips. That's a one-to-one trade. So this is a setup that's in progress. I'm going to let it play out a little bit more, see if it drops and gives me a better entry. But this will be a long play, and it will be alerted sometime this week as soon as I'm ready to jump in on it. So keep your eye on euro dollar. I would be expecting once it firms up and bounces off whatever it's going to bounce off of, that it will be making another run for the 125.50 area of this most recent high. And again, that is 200 pips from where it is right now, at a risk of 200 pips in the other direction. That is good enough for me. So this is a long-term trade that I will be entering very soon. I'll let you guys know when I do that. It likely won't be part of the Forex trading room, but I will let you guys know when I'm ready to jump in. Other than that, all we can say on this chart is it is definitely bullish. We can see that it's been bullish for ages, for the entire period of the chart. Yes, it has reached a high, then gone into a consolidation, moving sideways and slightly lower. But if you look at that trend line, this trend line has never been broken since we have the chart up. And I can tell you that it comes from far back as well. So there's nothing bearish about the euro dollar at this time or at any time in the last year or so, and I would not expect it to break. Of course, if it does break, it's going to give us great opportunities to trade back to this trend line down here, but I really don't see that happening right now. So I'm perfectly willing to take long trades on this one till the cows come home and play everything else by ear. But enough about the euro dollar. I'm going to move on to another of my my favorite pairs, the pound dollar. So the pound dollar, we can see something very similar. The pound came from the very bottom after Brexit and after a flash crash in October of that same year. It hit rock bottom where it just couldn't go any lower. Then started a recovery that has so far recovered about 2,300 pips as we as it is right now, so at the current price. My ultimate target based on fundamentals for the pound is around the 150 against the dollar. So it still has about 700 pips to go. And I'll be trying to take as many of those as I can via shorter entries on the 1 hour charts. Or if I see a good entry on the daily, I will take it. But likely I'll be jumping in on trades for anywhere between 50 and 100 pips. We already took some pips out of this one last week on the most recent rally, and we'll continue looking for those opportunities as time goes by. So I'm still bullish on the pound, and I'm going to be bullish on the pound for the remainder of the year at the very least. So that's my outlook on that one. Moving on to the USDJPY. The USDJPY has been very channel bound. You can see those nice little bounces bottom to bottom. Now it seems to be determined to head to the top of the channel yet again. It is following a very steep trend line. If this very steep trend line breaks, I will trade it back towards the bottom of the channel just simply because it tends to do that quite consistently before it decides to make a full trip to the other side. But I will also be looking for opportunities to trade it up if I see them. So I'm not married to any opinion with the USDJPY. I do believe that fundamentally it should be trading at 100 yen to the dollar, and that is 750 pips below where it is right now. But the yen has never been in any huge hurry to return to its fundamental values. So it's very much a currency that you do well to trade on the technical analysis while keeping those fundamental notions in the back of your head and referring to them, but always pick your entries based on what the technicals are doing. So we'll wait for any good entries. I've taken the JPY off my radar this week. I just don't see a whole lot of determination in either direction. This may continue to bounce along the bottom for a while. So once it determines what it's going to do, I'll be trying to trade it, but it's not really top of my list for the week. Moving on to the USD Canadian, and I already mentioned my thoughts on the Canadian when we looked at the relative strength meter. It has been recovering, and you can see that in this chart, how it's gone back towards the bottom. But that said, it hasn't been moving all that quickly. If you see one of these drops from way back, it definitely can drop faster than it has been doing. It's been very sideways at the same time, and it weakens for a couple of weeks or maybe for a couple of months, and then it strengthens, but much slower. It has now hit it has now created a new upward trend line on this latest bounce. So we'll see if this trend line holds and it continues heading higher. If it breaks the descending trend line, I will definitely take a long trade on this one. If it breaks towards the bottom, I will take a closer look at it. I wouldn't necessarily enter just because of that. So I will be keeping a close eye on the Canadian, but it's not going to be one of my top picks until I see it pick a direction and sustain it for a while. Okay, moving on to the Aussie dollar. And you guys are familiar with my views on the Aussie. I think it was unfairly punished for quite a while, since the beginning of the year, to be more exact. And we can see that it has sustained two sharp drops in the last year or so, as well as one very nice little rally. I'm expecting another rally of this sort to go back into the low 80s. So far, it seems to have bottomed out around the 76.50, which was its most recent low. It has a lower low right behind that one, so this is not a given that it's going to go up to the top in the very next few weeks or anything like that. But this bottoming out plus the little bit of a rally it's been doing is indicative that it might be trying to do that. Of course, we saw on Friday that the Friday rally completely reversed. That is normal for a Friday. So we'll see what the week brings for the Aussie. I still feel that it will go the extra 300 or 400 pips and get back to the top, but I'll let that one play itself out as regards the trading room. So if I see the trend line breaks or any other indicators telling me I should go long, I'll do that. If they tell me to go short, I'll do that as well. So it's going to be very technical for the Aussie in the coming weeks. Kiwi dollar. On the Kiwi dollar, we see a lot of sideways action for the last couple of months. It's just been bouncing between these two levels of support resistance. It's now very near the top, may likely continue to go higher and reach that level of resistance. On a break of this trend line, I would definitely like to trade it back towards the 0.71, which is right about where this level of support is at, or even to the bottom of its current channel at the 72. So there's 100 pips in between these two. I'm willing to take, let's see, there's about 150 pips from where it is right now to the bottom of its current channel, or 250 to the next level of support. I'm waiting on that trend line break. I wouldn't trade it up necessarily. I don't think it has that much left to give on the way up, but definitely I would trade it down. Also not on my active radar, but I will be keeping a close eye on it, looking for that direction to establish itself. USD Swiss is going to be our next pair. And we can see that the Swiss has weakened substantially against the dollar in the last couple of months. So it did reach a bottom, which you can see right here, which is the origin of these trend lines that I've added. It is currently following this outer trend line, likely trying to head somewhere to the top of this channel, as I had said maybe a week or a couple of weeks back, that was the general direction. We have traded it in both directions, and I will probably continue to do that. It's a slow and steady mover. I don't think I entered any USD Swiss trades last week, but it is on my immediate radar. I would really like for it to top out and break one of these trend lines, in which case I would like to trade it back towards a Swiss strength against the dollar. But it's a game of patience. We'll wait for it to actually happen and then jump in. If it does go up, it's got about maybe 125, 150 pips till the top of the channel, depending where exactly it meets it. And that channel has been a good indicator for quite a while. So playing that one by ear, we'll come back to it. Moving on to the Aus Canadian. The Canadian has strengthened against pretty much everybody in the last 2 or 3 weeks, actually 3 weeks, and you can see that playing out here. But again, the Aussie has been a very conflicted and punished currency for a while. So this is one of those that when it does start breaking back towards the top, we may see a really good opportunity to capture anywhere between 300 and 400 pips if it returns for a test of that high. More importantly, if you see how steeply it has fallen, there is actually no way for me to draw a trend line towards the bottom because we haven't had a valid high on this pair since its top. None of these points in between are valid highs because they don't have the 2 candles to the left and 2 candles to the right that are lower than the candle we would pick as the high. So I can't even draw a trend line. It's that steep. That's not sustainable. At some point, this one will give back with a vengeance. So we'll try to catch that. No rush. But at the first sign of Canadian weakness, and that may be on the interest rate announcement that we're going to have later in the week on Wednesday, might be a great opportunity for this one to give up some of that terrain. So keeping a close eye on this one, as well as all the other CAD and Aussie pairs, really. So this one is a mix of 2 of my favorite currencies right now, the Aussie and the Canadian. So definitely high on my radar. Moving on to the Euro Swiss, and we did take a nice. Yes, go ahead.
Yeah. The Australian dollar, Canadian dollar chart. Something I know that Australia, Canada are strong because of commodities, of their resources.
Yes.
Do you find any point in following and seeing how they're trading in the commodities as a guide for improving in the Forex?
Yes, specifically the Australian dollar has been hard hit precisely because of the fall in price of several commodities. They are heavily dependent on mining over there for a lot of their income, their revenue, I should say, not their income. Mm-hmm. So that has been punishing the Australian dollar more than other currencies, and that's why it's been falling since the beginning of the year. So that's the perfect explanation for what ails the Australian. Now, the Canadian, it depends on different commodities. Definitely oil is a big thing for the Canadian economy. So the price of oil and the price of the Canadian dollar are really entwined. You cannot really separate one from the other. So that has hurt the Canadian to a degree, and that's why we saw the Canadian, going towards weakness on most of these pairs. But more importantly, the fact that Trump has been trying to get out of the NAFTA, the North American Free Trade Agreement that the U.S. has with Canada and Mexico, that's what really caused the Canadian to go into a tailspin. And on recent news that he's softening his tone and he might just sign a very slightly revised or even the same agreement again, just to say that it was his agreements and not Obama's or Clinton's or Hillary's or whoever,
Right.
has made the Canadian recover. So that's the explanation on why the Canadian has been getting stronger. But the flip side of that is that the slightest negative news or the slightest negative tweet from Trump, and this one could just go all the way back to the top. So it's really hanging by a thread. But yes, you're right. If you do a little bit of homework on some of these currencies that really rely on commodities, and in the case of Canada, also the geopolitical news like the NAFTA agreement, you'll get a good insight. That's what I call the fundamentals.
Right.
So that will give you a pretty good idea of where the currency should be. And if you find that it's not there, that means either you didn't understand it or the market's not understanding it. In which case you have a brilliant trade on your hands, because you can just start trading it in the direction you expect the market to go when it eventually regains its senses. A lot of my trades have been like that. I've been deep in the red for 6-8 months, and then suddenly in 1 month it moves 1,000 pips because everybody else woke up.
Okay. I'll ask one other question. There was news that the ruble was hit hard last week, and I was looking at it and definitely took a hit. Any comment about that in the larger global sphere?
Yeah, here's my problem with the ruble, the yuan, and monopoly money in general. So they are currencies, they are traded, they're what we call the exotics. But more importantly, if you look at the ruble and you look at the yuan, their exchange rate is set by the government. So it really doesn't follow technical analysis. It's whatever Putin decides to do tomorrow morning, that will be the new price of the ruble officially. And the charts will just have to reflect that. And since I can't draw a technical analysis on what's going on in his head at any given point in time, I simply don't trade that. The yuan is the same thing. The committee that controls the Chinese currency will set the exchange rate. It's by law. They will say, okay, today it's going to be 5 for a dollar. Tomorrow it could be 6 for a dollar. You cannot predict it. It's not based on fundamentals. It's not based on technical analysis. It's based on how this Chinese guy was treated by his mistress last night, and I don't trade on that.
Right.
Can you make money off of it? Certainly. I know a lot of people who do, but it's not part of my risk control, and I just refuse to trade them.
Okay.
Okay. Well, thank you for your questions. As always, very insightful. I'm going to move on now to the Euro Swiss. So as I said, we did take a nice chunk of pips out of the Euro Swiss yesterday, and there's an anecdote behind that I'll get to before we reach the end of this session. But more importantly, we have a bullish trend line. So it has started to rise. It's broken out of its prior channel and made a new high, which I haven't drawn yet, simply because I don't have those two candles to the left, to the right, I'm sorry. So once I have those two candles to the right, I can make another high at this candle, or perhaps not. It may continue rising, and this is not a valid high. So we won't know for another day or two what it's going to end up doing. But for now, it's still rising. I did get out of this trade last week simply because I had adjusted my stop to protect my profit. And the drop on Friday, the usual Friday retracement, took me out. If any of you are still in that Euro Swiss trade that we opened in the Forex trading room last week, which means you did not adjust the stop when I adjusted it, I would not be in a hurry to close it out. It seems to be traveling in the right direction. It may continue to do so for the week. However, your stop should at least be at break even. Once you've captured a nice chunk of pips, don't let the market take them away. I made that mistake on one trade last week, and it'll happen to everybody eventually. They just grow complacent on a trade because we think it's going to definitely move in the right direction. Then it doesn't. But more importantly, that trade that I had was at a nice chunk of profit twice, not once, but twice. And then I let it back away from me and take me out at the stop loss at a loss. I should have at least moved the stop loss to break even. So that's what I'm telling you to do with this one. If you're still in it, that stop loss should be at break even or better. Don't let the market take you back into a loss on a good trade. But that being said, if you're still in it, I wouldn't close it out. Just make sure you're adjusting your stop along the way. And we'll continue looking at the Euro Swiss for any further opportunities this week as the market starts moving. Moving on to the Euro Pound. Probably the worst trade I was in, even though it did give me my profit. I had taken a 50 pip trade on the Euro Pound maybe 3 weeks ago, and it spent those entire 3 weeks giving me the 50 pips. It finally gave me the 50 pips last week, but in retrospect, I should have closed it out way sooner and not have spent so much time on the on that one trade. But that being said, it still continues to drive towards the bottom. So we see that the pound continues to gain strength on the euro, even though we've had a lot of sideways movement since the middle of last year. This is August when it broke into this channel that it's been bouncing off of quite nicely. It may be due for another trip to the top. I don't think so. I think this breakout here at the bottom means that we're seeing significant pound strength coming back. As I mentioned, my target for the pound is 150 against the dollar. That means that this one is also going to be dropping at least another 300, 400 pips as it does that, if it is a pound rally. So we'll take a look at that. It's still, this pair is still on my radar. I forget, Jeffrey, did you ever close that Euro Pound trade out, or are you still in it?
I think I got taken out of that.
Okay. So I know you caught most of the big move here. I forget if you were out. Okay, so it'll be a fresh trade. If I do alert on this one, it will be a completely new trade then if nobody has any open Euro Pound. Good to know. So I'm going to be taking a very close look at all the pound and euro pairs this week. They're going to be high on my radar. This again combines two that I'm naturally interested in, so it's going to be top of my deck for at least a week. So more news on that later. Moving on to the EURJPY. The EURJPY bottomed out 2-3 weeks ago, here around, actually a month ago, around the middle of March. It did make a new bottom. It has since established an upward trend line and is traveling nicely along it. Now, this is a daily chart. This has broken through the trend line as well. Probably a very nice entry would have been when it did this test here at the bottom. I did not take it at the time. I thought it was going to pierce and do another test, and now it's moved too far. So if I see a short-term entry on the hourly charts, I will take it. But the nice entry that this daily would have provided us maybe a couple of weeks back has now just moved too far away from my comfort. So keeping an eye on it, but no long-term entry for me there. I always try to look for those long terms when I can, but this one just didn't pan out. Euro Canadian. So on the Euro Canadian, we see that it has established a very nice little channel. It broke out of that channel and stayed above the channel for quite a while before dropping again to the bottom. As I mentioned before, I'm not a huge believer in this being the Canadian rally I've been waiting for. So I think this one is going to pop back to the top. On the daily chart, if you see this trend line, the steepest trend line here, that is the current one that is falling towards the bottom, on a break of that trend line, I'm going to go long till at least till the top of the channel. So that's going to be one that I'll be looking at daily to see when that trend line break happens. And of course, I'll be looking at opportunities on the hourly chart for smaller movements. So stay tuned for that one as well. Another one that's top of my deck. Pound JPY. The pound JPY has also been doing interesting things. I did alert this one quite a while back when it broke into the channel after having gone below it for a couple of weeks or so. When it broke in, I said it was definitely trying to make its way to the top. It has, in fact, reached the top of the channel, pierced it significantly, dropped down on Friday, and is now hanging out exactly at the top of that sideways channel. Where it goes, I don't know. We're not in the predicting game, but I'll definitely be looking at a piercing of this trend line that's very near the top, or this other trend line coming from the bottom for my entry signal to trade it back down towards the bottom of the channel. Again, that'll be a long-term trade. I'll be looking for short-term entries on the hourly as well. But I'm just mixing this one up a little bit here because I do see a nice potential start forming. However, if it continues heading upward, then we've also have gotten a nice potential here to the top, the most recent high at 156.50 or that neighborhood, which is about 400 pips above, actually 300 pips above its current range, 350 pips above the current range. So another one that's high on my radar. It looks like we're in a little bit of a Japanese slump right now. So I wouldn't be surprised if it does try to head towards the top. So the first day or two of the market this week is really going to tell me in which direction I would like to play the pound JPY. High on my radar, but I don't have any gut feeling right now as to which way it might be headed. AUDJPY. The AUDJPY, as with all the Aussie pairs, pretty much all of them, it did make a bottom 3 or so weeks back and has now staged a really nice recovery. This is one of my long-term trades. I am still in it, still writing it nicely. More importantly, this pair did give us about 120, 130 pips of profit in short-term trades last week here in the Forex trading room. We entered long on the AUDJPY twice, and both times got taken out a profit, one of them for about 80 pips, the other one for 50 pips or so. So most of the profit last week was thanks to this pair. I'll be keeping a close eye on it, especially now it's breaking this outer trend line. That may mean that we're in for a nice ride back to the top, which is what I've been expecting for a while. It's just taking a bit to fulfill. I'd actually been going long since this break back here on the trend line, and obviously I was deep in the red for quite a while, and now it's coming back to recovery. That was in the long-term trade. In the short term, I've been trading it in both directions, and I think more successfully than not, based on what I recall from my trading logs. But there you have it. I still expect this one to continue making its way up, and I'll be looking for opportunities for entry early on in the week to take advantage of it. Euro New Zealand. Euro New Zealand has been trading sideways on the daily for quite a while and is getting very near the bottom of its range. I have expectations that this one is going to make a trip back towards the top. It has met a major point of support on this trend line. There is another trend line below it, so this one is really the outer. But this one here also has a little bit of strength. We might see a bounce, and if it does pierce this other trend line here on top, even a trip back towards the top of the chart. I really don't have a whole lot of hope that anything is going to happen with the Euro Kiwi this week. I'll be keeping an eye on it, but it's not in the it's not among my favorites for the week right now. Pound Canadian, and I'm not going to repeat what I said about the Canadian. I think it's trying to head back to the top very soon. More importantly, we have this descending trend line on the pound CAD. And on a break of this one on the daily, I'm going to be going bullish with all engines and all this back towards the top of the chart, which is the 184. And this is almost exactly 184 here at the top. And I should have added that high. I'll be adding it to the chart. This is a valid high exactly at 184. And we're currently more than 400 pips below that. So it's about 475 pips, almost 500 pips as we speak. So once it does break that trend line, we're still going to have about 400 pips worth of a potential move towards the top, and I want. So I'll be keeping a very close eye on the pound Canadian to get into that trade as soon as it gives me a good signal for entry. And that was it. That does cover all my charts for review here at the beginning of the week. Now we're going to look at some of the, just a summary of my findings. So on the Canadian pairs, we have the Canadian dollar continuing to regain strength, but I definitely don't trust it. I'm waiting for a break of that Canadian rally. However, as I mentioned earlier, we have the Canadian interest rate decision, so it could go either way. If I do trade the Canadian based on technicals during the first 2 days of the market, I'm definitely either going to get out of those trades or very, very strictly tighten my stops before the Canadian interest rate announcement on Wednesday. And as I said, we'll be trading that one live. So you'll get my guidance on what to do if you have any Canadian trades open. You'll get that at that time. But this is definitely one of the pairs I'm most eagerly watching. The Australian, not going to dwell on it a whole lot. You guys already know I'm expecting it to rally, to recover. Of course, it could drop further, but I think there is a huge opportunity for long-term trades as well as short-term ones based on a recovery of the Aussie. The Euro pairs, I see that the Euro USD, and I mentioned this when we looked at that first chart today, it's priming itself for continuation of that bullish trend. It's broken the trend line. I'm probably going to be entering a long-term trade with 200 pips of risk against 200 pips of reward very soon. I'll wait maybe till tomorrow for the market to kick off and tell me what direction it's likely to prefer for the week. So I'm going to give it my usual 24 hours. And then if I like what I see, I will jump in long and also alert that out so you guys can take advantage of it if you want. But at that same time, with the Euro USD in particular, we may get that perfect storm where the Euro strength is coupled with USD weakness, making it just move twice as fast. So like I say there, half tongue in cheek, on your marks, get set. We're just ready for that go to be screamed out. And I'll be jumping in long with as all guns blazing, with as much equity as I want to risk on one trade. The pound pairs, the British pound is still regaining strength. It has been for a year or more now, so that's no surprise. But my fundamental target, and by that I mean the price I think the pound should be at based on my fundamental assessment of the currency, taking every single factor into consideration, which again, I could be wrong, but based on my analysis, it should be trading much closer to the 150 area than to where it is now, close to the 140. And we have about 700 pips of potential. I'll be looking for entries to capture as much of that based on short-term trading as is possible. And of course, you guys will be privy to that. Last but not least, the USD pairs, they're always high on my radar just simply because of volatility. But I'm definitely making sure you understand that trading the USD dollar, especially with everything going on, we just bombed area. Luckily, we did that with the UK and France in tow, yipping and yapping, I'm going to say. Sorry if I offend anybody, but they seem to be going along with what we're saying. Curiously enough, Germany didn't chime in or do anything, but it's very indicative that both the UK and France decided to go along with us, given the political climate and the fact that neither country is a fan of Trump. So I'm still at a loss as to why they would have gone in with us. Maybe they don't want to lose out on anything gained. But anyway, political unrest around the world, the imminence of a trade war, the stuff with North Korea that I'm not even mentioning, but is always there in the background. The dollar could go in either direction. So certainly take profit out of it as you can. Short-term trading. Unless you have a really good opportunity like the one I'm showing on the Euro US dollar or even the Aussie US dollar, when you believe that there's another fundamental that's stronger in the background, I would be very careful trading the USD pairs, and I would especially be very careful of trading them towards dollar strength. I'd be more likely to trade them into dollar weakness. When there's uncertainty in the market, weakness is usually the direction. You rarely hear that, well, I'm uncertain what's going to happen, so, dollar's going to get stronger. Nope, works the other way around. So keep that in mind as you look for setups. And now for our final words here are going to be on discipline. And I told you I had an anecdote on that Euro Swiss trade. But more importantly, if you have a trading plan, you've got your equity management, your risk control, you've got your trading system, you've got all the other bells and whistles and magic lanterns and holy grails and all that, that's all fine and dandy. But if your trading psychology is not up to par with the rest of that, they're not going to help you. If you don't have the discipline to follow your rules, why have them in the first place? And this was driven home for me last week. And those of you that were in the Forex trading room with me when I took the Euro Swiss trade, you probably remember my comment. I didn't want to take that trade. I looked at the chart. I almost moved on. And then I said, damn it, the indicators are telling me to go long. And despite the fact that I didn't like that, it was my trading system. My trading system was telling me to go long, telling me to take the trade. I did take the trade, and that trade that I didn't like was probably the second best trade of the week and hit my target for profit very quickly. And I hated that trade. I hated it up until the moment that it took me out at profit. So what I'm trying to tell you here is that you guys have to have the discipline. Trading is not based on gut feelings or what I want to do today or how I'm feeling. You have to have a system. You have to have an entire framework that's telling you what to do. And then you have to have the discipline and the guts to just follow the system, even if you disagree with it. If the system ends up not working out for some extended period, by all means, don't be an idiot. Don't continue following a system that's losing money for you. At that point, you reassess and maybe you change the system. But while you're following a system, do yourselves a favor and follow it. So that's going to be the winding down message here for the start of the week analysis. So on that note, I'm going to move on to a bit of Q&A. But first, Callum, do you have anything you'd like to add to anything there?
No, you pretty much said what I was going to say about discipline.
God damn it! I hate it when I do that, man.
No, that's fine. I'll just sit in the background.
All righty. Okay. So everybody else, any questions, comments?
Mainly, thank you. Been a good review. Gets me fired up for the week.
Fantastic. Fantastic. All righty. Then if nobody has anything else, I will see you guys again tomorrow at noon Eastern Daylight Time, so noon my time, whatever that is around the world. Good luck with that. And of course, if any of you have anything, you can reach out to me at any time, so feel free to do so, or reach out to Callum, depending on the nature of your question. He'll be happy as well to help you out with anything. Jeffrey, when are you back among the living?
On next Sunday.
Okay, so this entire week you're going to be out on business, okay? So join as you can. As usual, I will send you emails with anything that happens if you're not in the session. Otherwise, I look forward to seeing you.
Okay. Thank you.
Thank you. Okay, guys, thank you very much. This is Andy Pedraza for Special Effects Academy signing out for today. See you tomorrow. Bye-bye.